Hello, this is Dan Perkins, and thank you for watching this issue of Money in Motion video blog. Today I want to talk about two things. I want to talk about technical analysis, meaning the market's going up and going down within patterns or predictable patterns. And two, the Republicans kicking the can down the road, along with the Democrats, on what to do about unemployment and the deficit. So let's deal with the numbers first. The market seems to be trading sideways. We had a pretty good rally in the first 4 to 5 weeks of this year, and now we're running out of steam. The market seems to be trading between about 1340 and 1355 to 1360. Support and resistance helps us understand the strength and weakness and the general trading patterns of the market. You're going to see in a moment a chart that shows the 3 levels of support for the market at different points on the S&P 500. These are called resistance points, meaning that the markets can run to these points, and if there isn't enough strength to get them through, get the market through this number, it'll probably fall back. We've had 3 attempts at this 1350 to 1360 level, and my concern is we may be setting ourselves up for a correction. In my earlier blog, I suggested that we may be in a situation where we could see a significant correction sometime in the first quarter. I'm becoming more and more concerned that the market seems to be running out of steam, running out of momentum. You know, it's up 110 points one day, it's down 109 points the next day. It's not really making any significant progress. So this tells me that the market seems to be tired or long in the tooth, as they say. And so I wouldn't be surprised that relatively soon we could see a pretty good correction, maybe in the 5 to 10% range, but not the big correction that I'm looking for, probably as much as 20% perhaps later in the year. Technical support helps me decide when I should buy, because not only do the indexes, the S&P 500 had support and resistance, so do common stocks. Those of you that are new to our relationship, you know that it takes me quite a while to put money to work because I'm looking for entry points. And if I don't get those entry points, I just don't buy. As I was saying to a client last week, their money does not burn a hole in my pocket. I'm not in a great hurry to make a mistake. Not that I don't make mistakes, but I try to minimize those mistakes. What I am trying to do is pick an appropriate time based on the relative momentum in the marketplace to try and get into a particular security or series of securities that I like. So look for the market to continue to be trading in this 1340 to 1360 range, and then I think we're probably likely to see some kind of a correction coming soon. Let me move on to the capitulations that took place in Congress, again kicking the can down the road by extending the payroll tax reduction, and number 2, current discussion about extending the unemployment benefits out till the end of 2012. Believe it or not, in some states you can qualify for unemployment benefits for 99 weeks. That seems to me to be an incredible period of time not going to work. And we want to keep extending and extending and extending the benefits instead of dealing with the reality is that we have a jobs problem. Yes, we've seen some pickup in the jobs numbers, meaning jobs being created, but not nearly enough on a consistent basis to significantly change the real unemployment numbers. Now, I say real unemployment because we spoke some time ago about the funny math that goes into Washington and how they figure the unemployment rate, and when you run out of benefits, you basically drop off the rolls. In fact, if the Congress were not to extend the unemployment benefits by the millions of people who would drop off of the benefits rolls in the calculation of the unemployment rate, what you would see is within a very short period of time, the unemployment rate would plunge to about 4%. Now, you and I know that that's not true, but it's the kind of math that they play in Washington. I'm terribly disappointed that realizing that we've got problems, we can't have politicians who will stand up and take a stand and say, we have to make the hard decisions. Nobody wants to make the hard decisions. And what we just saw on the payroll tax and on what's going on the unemployment extension, nobody wants to make the hard decisions. I realize people out of work are in pain and in misery, but a greater number of people are in pain and misery because the government has not become fiscally responsible. We now have a deficit in excess of $15.5 trillion, and our deficit on an annual basis is greater than the GDP of the country. How we can watch what's going on in Greece and Italy and Spain and Portugal and not see a reflection of ourselves and where we're headed is beyond me. How the politicians can't see that. At some point in time, we're either going to be the way of Greece and the world is not going to believe us any longer, and they're not going to buy our treasury debt, or they're not going to buy it at a price that we can afford to pay, and we're going to be in exactly the same position. It's very disheartening that we have leaders who can't make the hard decisions. Maybe, just maybe, in this coming election, we will bring in new Americans who believe that we have to be responsible not only for ourselves and for our children. So that's it for now. This is Dan Perkins. Should you have questions, please feel free to give me a call or send me an email. And by the way, got somebody who needs help? Have them give me a call. Thanks for watching.